Hello and welcome to the NTAA's 2015-2016 Federal Budget Update. My name's Rebecca Morgan and of course I have Fatma Hashim here, and together we hope to take you through the main tax related changes of course that were included in the federal budget papers. I'm going to kick off by first of all highlighting probably the most exciting issue, particularly for our small business clients, that will be applicable from budget night, and that of course is the increase to the small business entity immediate depreciation write-off. And you can forget about $1,000, you can even forget about $6,500. On a temporary basis, they're looking to increase this to $20,000. So in other words, an immediate deduction for depreciating assets costing less than $20,000. And this will be applicable, as I said, from budget night, so from 7:30 p.m. from the 12th of May 2015 through to the 30th of June 2017. So I think some exciting changes.
That's
and
awesome.
Certainly clients will start to ring to find out the detail of that, but we still only of course have the relevant budget papers there at the moment. Then of course if we move through to changes applicable for the 2016 year, Fatma, and they're talking about tax cuts again for small business, so can you just take us through what that means?
Certainly, the company tax rate is going to be reduced to 28.5%, so that's a 1.5% reduction.
Okay, but for all companies?
No,
or?
just for companies with an aggregated annual turnover of less than 2 million, so small businesses essentially. And the maximum franking credit rate, however, for distributions is going to remain at 30%, which is good news.
So we don't have to worry about rejigging our
franking accounts. That's right. And the second change or second cut for small business taxpayers is individual taxpayers with business income from an unincorporated business that again is an aggregated annual turnover of less than 2 million will be eligible for a 5% discount on the income tax that they have to pay on that income.
Okay, is that capped at all? Or?
Yes, it's capped at $1,000 per individual, and it's going to be delivered by way of a tax offset.
All right, beautiful. All right, well that's interesting and also helpful as well.
Yeah.
Just again, I'll stick with the changes from the budget paper that's applicable for the 2016 year. I noticed that they're also looking actually at rejigging Division 28, which of course deals with the 4 different methods we have for claiming income tax deductions for our motor vehicles. Now the first thing I noticed that they're actually looking to abolish or remove 2 of those 4 methods, which is the 12% of the original value method and also the 1/3 of actual expenses method. And then they talk about modernising the cents per kilometre method. So exactly what are they doing there?
That's right. We currently have 3 different cents per kilometre rates that are based on engine size. They're replacing all that with a single rate of 66 cents per kilometre for all cars.
Okay.
And then the Commissioner will thereafter update that each year.
So presumably it'll be indexed or adjusted
accordingly.
Perhaps, as the current rates are. And I take it to the logbook method stays as it is. There's no changes there.
That's right.
Okay, so going forward, at least from the 2016 year, it looks like we'll only have the logbook method and then this revised
and the cents per kilometre.
All right. The other thing I noticed as well, just looking at offsets, we seem to have abolishment of offsets, but now we have the idea of dealing with the zone tax offset. And the ATO, or rather the government, I should say, talk about better targeting this particular offset. And they're wanting to exclude fly-in and fly-out and also drive-in, drive-out workers, so the FIDO and DIDO workers, which as we know, there's a lot of them out there. Currently, you can actually qualify for the zone tax offset even if you don't reside normally within a remote area, but if you happen to work there for a set number of days, usually it's around half the relevant income tax year, and in fact it's estimated that about 20% of the claimants, they said in the budget paper, don't actually live full-time in the relevant zone. So they're obviously looking at trying to exclude that, but it seems they're particularly picking on, for want of a better word, the FIDO and DIDO workers who won't be eligible for the zone tax offset unless they actually normally reside rather than just simply work in that area. So
that's
again,
right. Targeting it better.
Yeah, okay, and obviously a cost-cutting, a saving, I'd say, for the government, at least from their point of view.
I think so.
Now, there's also, however, looking again at small business, I noticed there was this discussion about introducing a concept of an immediate deduction for certain professional expenses. Again, can you highlight that for me?
Actually, this one is, as we know, some professional costs that are associated with starting up a business can only be written off over 5 years under the black hole provisions. Yep. What the government's doing is not just for small business but for all businesses,
allowing
them to claim a certain range of professional costs immediately, so upfront, and this will be things like legal and accounting
I
rights.
was going to say, okay, so legal and accounting fees to establish your business and your structure.
That's
presumably.
right. So it's a good result.
Yeah, that's an excellent result. And again, I'll just finish off on changes that we've highlighted for the 2016 income tax year, or at least what's proposed for that. This time, the relaxation of release criteria for preserved superannuation benefits, and in particular, they're looking at the condition of release for terminal medical conditions. At the moment, unfortunately, if somebody is diagnosed with a terminal medical condition, they can access their super, but they basically have to get 2 doctors to sign off on the fact that they're effectively going to pass away within 1 year, which isn't going to be a good conversation to have, is it? Nevertheless, the whole idea is to try to get them to have access to their superannuation. So the change they're looking at here is to still require that same that process of getting the 2 doctors to sign off, but rather than them likely to die within 1 year, they're looking at to expand that to a 2-year period. And I think there's been a lot of press coverage on that before the budget, just trying to get access for people who would otherwise miss out. So
it's another good measure.
Absolutely. All right, well, then we'll move on to the announcements that are meant to be effective from 1 July 2016, so for the 2017 income tax year. We're looking forward to the future now. And again, CGT rollover for changes to entity structures. This can be an exciting one if it applies.
Yep, this is one for small businesses. So as we know, currently individuals can incorporate and they get CGT rollover relief. However, most other restructures will generally trigger a CGT liability.
Yeah, for example, if you want to go into a trust, which is fairly common, isn't it?
That's right.
There's no rollover.
Yeah, so from 1 July 2016, the government's going to allow small businesses, so again we're talking about those with aggregated annual turnovers of less than 2 million to change their business structure without triggering a CGT liability at that point.
That's big news, isn't it?
It's great, yeah.
A lot of people start as a sole trader, and as the business progresses, they
may find it doesn't suit them anymore. That's
okay.
right.
Very good news. Also, while I'm talking about good news, primary producers, they are again looking at this idea of accelerated depreciation, but particularly with respect to things such as fences and water facilities. They're looking to allow farmers to actually claim an immediate deduction for capital expenditure on fencing and water facilities from the 2017 income tax year. They're also looking to increase the depreciation rates for fodder storage assets such as silos and tanks and the like. Apparently at the moment that's a 50-year write-off. They're looking to allow people to write that off over 3 years.
That's massive.
It is massive. So I think there's some changes for our primary producer clients there that will certainly be well received. Then also changes to the residency rules.
This is a surprise.
It is, isn't it? So I guess there is a bit of a loophole at the moment that if we have someone who comes to Australia and works here for more than 6 months or at least 6 months, usually under the temporary working visa, there is an ability for them to argue that they're an Australian tax resident if they can demonstrate that they sort of don't have a usual abode outside of Australia and the like. But what that means, of course, is that they can actually access the tax-free thresholds and some other tax benefits of being an Australian tax resident. And I believe the changes announced are looking that from 1 July 2016, they're wanting to treat most of these people who come to Australia on a temporary basis on a working visa simply as a non-resident. So we don't get into sort of a factual situation of trying to determine what they are.
Yeah, so of course that means they'll be taxed from the first dollar at the current rates at 32.5%.
Yeah, exactly. So they're not going to get the benefit of a tax-free threshold based on these visas. So it'll be interesting to see how they implement that. But again, another cost saving. And I also think they've got some FBT announcements as well. I saw something to do with iPads.
I thought you might have identified this one. Yeah, as you know, currently there's an FBT exemption where an employer provides an employee with an eligible work-related device item, including portable electronic devices such as your iPad. However, that exemption generally doesn't apply where an employee was provided with several items in the one FBT year where those items have substantially identical functions. So this is a bit of a compliance nightmare with today's technology because some devices have overlapping functions. So to make it easier, what the government's saying is that from 1 April 2016, so the 2017 FBT year, they're going to allow small businesses to claim the FBT exemption where they provide, even if they're providing multiple devices,
like
qualifying
a
devices.
And a tablet and all sorts of different
so if they
technology.
provide more than one device, qualifying device to the same employee, they'll be able to claim the exemption, notwithstanding that the functions may be substantially similar. So it's removing that confusion.
Okay, but that's not for all employers, is it? It's only
Small
again for
business.
small businesses. So,
Yep.
and again, we're assuming that they'll probably go with the SBE, less than $2 million aggregated turnover.
Seems that way, yeah.
Okay, well that's helpful. The other big news from FBT that I was taking a look at certainly was interesting, and I think a lot of people may be upset about this.
This is massive.
As we know, if you're employed through a rebatable employer, or more importantly a public benevolent institution or a hospital and the like, you have access to very lovely salary packaging benefits, one of which is an unlimited access to salary packaging meal entertainment and entertainment facility leasing expenses such as the cost of hire or holiday accommodation and the like. That currently is an unlimited benefit that you can salary package. They are now looking to introduce a separate single grossed up cap of $5,000 for these salary sacrificed meal entertainment and entertainment facility leasing expenses, and that cap, I believe, will operate separately to the normal caps that are applicable for the other FBT concessions that are available for these particular employees.
That's correct, and they'll also become reportable, those meal entertainment benefits.
So of course they're currently, exactly right, they're currently unreportable. Now they're going to be reportable, which will be significant for a lot of the income tests and thresholds for Medicare and all the other government benefits.
Yeah, definitely.
Yeah, all right. Well, moving on then, that's FBT. What about GST? Are there any changes? People keep talking about this net flip tax. What are they talking about there?
Yeah, we've heard a lot about this in the media in recent weeks, and now the budget confirms that from 1 July 2017, GST will apply to supplies of digital products and services that are imported by consumers locally from overseas suppliers. So what we're talking about is our Netflix subscriptions or downloads of music, books, and
so
those movies, digital downloads.
10% GST applied, basically.
That's right, because currently if you're downloading those from an overseas supplier, you're not paying GST, but generally when you're downloading those things from a local supplier, you are, so there's a competitive disadvantage for our local suppliers. Yep.
All right, well, there's a lot of other changes that's certainly contained in the budget papers. That's certainly contained with the NTAA summary, which is available on our website. Changes to the paid parental leave scheme, childcare changes with respect to the age pension. From a tax point of view as well, we do have some tweaks to the research and development tax incentive, as well as certain changes for the family tax benefit. But I might just get you to finalise our tax summary today. Of course, each year with the federal budget, we just get an update to the Medicare levy low income thresholds. Could you just give us what those are, of course, for the 2015 year?
Yeah, absolutely. For individuals, the threshold's 20,896, and for families, 35,261. And just with the family's income threshold, that's increased by 3,238 for each dependent child or student.
Fantastic. All right, well, thanks so much for your help today, Fatma.
You're welcome.
Hopefully that was of use to you back at the office. Certainly a few exciting changes there. Again, we do have available on the NTAA website our full summary with respect to the tax-related changes from the federal budget. Otherwise, we'll see you next year to see what other changes they have in store for us going forward. Thank you.